All right, good morning, everyone. It is 9:21 in the morning of August 28th, 2022, and this is my pre-market strategy session. So, what happened on Friday? Well, on the cues, it was just absolutely perfect. This support resistance line, is definitely resistance. It came up, tapped it on Friday, attempted to break above and move above. Maybe it sucked in some bulls. I doubt it though, because Powell, some people call him Poopy Pants Powell, came out and said there's going to be pain. So the Fed is definitely hawkish. And, it makes sense. Essentially, there have been a couple bills passed funding the Congress has passed and the president signed some funding for some rather specialized industries. And in the text of the bills, there's a whole bunch of inflationary spending that's going to take place over the next course of the next 6 to 12 months. And the Fed is going to be hawkish. The Fed will be looking to tighten, and that's the way it's got to be. That it's either the Fed tightens and brings inflation down, or we start we go through a pretty rough recession. Hopefully it doesn't turn into depression. That's what the IMF, International Monetary Fund, and the World Economic Forum, the WEF, and a whole boatload of Wall Street banks have been warning about now for 12 months or so, along with a whole boatload of money managers, as well as the founder of Hedgeye, Keith McCulloch. It's coming. Here it is. And really, what we ought to be seeing here over the next few days is a rather similar cascade effect that we saw back here. This is the 9th of June here to the 13th of June. Had just a cascading bear move. And, the market's going to open up gapping down this morning. And I imagine that it's probably going to look like that for the next couple of days, at least. There is this sort of this support line down here, kind of. After the first couple days of the market adjusting for Powell's recent speech and his recent comments, I'm guessing there's going to be some buying. But Elliott Wave, I'm not an Elliott Wave guy, and by no means am I an Elliott Wave expert. I forgot to change the title of the video today. But there's an Elliott Wave guy that I pay attention to who's saying we're looking at definitely sub 270, and looking probably around 250 or so before this next leg down wears itself out, according to Elliott Wave theory, whatever. I really don't pay much attention to it. Actually, while I'm doing this, let me put a Fibonacci on this thing. I'm going to take some of these scribblings off here. Let's see. I have a trend line there, horizontal ray. I'll just go ahead and delete the brush marks that I just made. And so let's take a look. Let's go from bottom to top here, from the 2020 bottom to the 2022. Actually, that's a 2021 top. And let's put a Fibonacci on it. So let's see. I think it's probably best to go from top to bottom. No, it's going to be best to go from bottom to top. All right, so here we go. To there. Let's get it right up to the top there. There we go. And it's right at the bottom, it's right at the top. 50% retracement from this move. So from the bottom of 2020 to the top of 2021. Almost 2 years difference there, almost 2 years. It had, and you know what? I never did pay attention to this. I didn't pay attention to this closely enough. Let's go to the close. Let's do it on the close there, and then I'll go to the close. Go to the close on this one. It really should be from close to close, not from absolute peak to absolute bottom. And really almost a textbook bounce there off of the 61.8 fib back here in March. Tried to catch some support at the 50% move. Really plowed, did catch a little bit of support there and plowed through it. Tried to get back above the 61.8, and yeah, it's not going to hold the 61.8. There might be some support again down here at the 50 for a little bounce. You know, to kind of shake off any of the really bearish types. But yeah, this thing is it's headed on down. Let's see, the zero mark is at 170. Wow. I don't think it. Who knows? I mean, because so the next extension, the next logical extension for this pattern to complete itself in terms of Fibonacci is for it to go down here. Good golly, that would be 25 on the Qs. $25. Paid $25 for the Qs. Yeesh. That could take. Let's see. It could take somewhere around 6 years to play out. Oof. I hope that's not the case. All right. Well, so, okay, there are the Qs. The Qs are playing out just picture perfect. It doesn't get any easier than that. Yeah, it's a day to be bearish, no doubt about it. We ought to see some follow through here. I'd be, you know, after a huge down candle like this, you know, it creates, it's almost like a sinking ship. I've never been, you know, on a ship that sinks, but from what I understand is if you're on a sinking ship, you got to swim away from the ship as fast as possible because the downdraft will pull you down. And that's what's happening today. The downdraft is just going to pull the market down. So here's the SPY. Now the SPY, you know, I was expecting the SPY to be able to make it a little bit closer to this resistance line and not quite make it and then start turning over. But Friday, it just rolled over. It didn't. It's not rolling over. It just took a dive. Same thing. It's possible today that price action could close the gap and maybe even go above it and then start tumbling down again, but I don't think so. I think that there's going to probably be some short covering at the open. Actually, we're only a minute away from the open. I took my oldest son, it was his first day in school today, first day back at school, and so got him into school and got his younger brother into school, into preschool, and yeah, it was kind of a big day, big morning. So I'm a little bit late doing this, but yeah, we're let's see how many seconds away we are. Let's see, we're about almost 15 seconds away from the open. So I imagine that there's probably going to be some short covering. Here, let's see how accurate I can do this. This is the 1 minute. Let me go to the 10 minute and see how accurate I can get on the 10 minute. Let's see. So, oh, it already opened. Here, let me make my sketch. So, zzz, zzz, zzz. Let's see how accurate that is. I'll leave it up there. Yeah, it's gonna be a down day. And I don't see anywhere to go for anything, you know, green, unless you're playing the VIX, long side on the VIX, which the VIX is back at 27. Let's take a look at this on the daily. Get it off of the marker. Oof. Yeah, look at that. You're not supposed to chart the VIX, but here, you know, I was hopeful. I was really hopeful right in here, you know. With all the bad news and everything, I think I commented, I know I did, I commented on this last week. I was really hopeful that, you know, we were going to see the VIX calm down and head down, and all this was going to be in the rearview mirror, and it was going to be all puppies and rainbows from here to the end of the year, but it's not going to happen. September and October just historically negative months for the market. Um, the the negative GDP is forecast to extend into the second quarter of 2023. It may be even past that. There might be six quarters, that is, of negative GDP coming at us here. So, yeah, it is what it is. Protect your portfolio and hedge, hedge, hedge. All right. What else? Is it the SPY that I put the scribbles on? Let's see. Yeah, I scribbled on the SPY. So let's see. Let's see how things are shaping up so far. Yeah, we'll see. We'll see what happens. All right. So then after that, oil ought to be getting a shellacking. But you know what? I'd be willing to bet that oil moves up in this nasty, nasty market move. It's up 1.4% today. Up 1.4%. If I were to guess, and it is just a guess, oil bottoms out right here. Oil bottoms out and starts climbing back up again right in here. Yeah. So this is definitely a distribution looking pattern. So in order for it to no longer be in distribution, though, it needs to break above, say, this 120 level for sure, and a 126. Yeah, if we find ourselves back above those prices, $200 oil is on its way. Easy. Maybe even higher. Oof. Oof. All right. What else is going on here? Let's look. Gold is probably getting its butt kicked. No. Gold is catching a little bit of a bid here. Gold looks like it usually. Even when gold sold off on Friday. In a crash, all correlations go to 1. There's nowhere to go in a crash. Even like the utilities, everything just takes a dump in a crash. And it looks like the way it's going. Let's look at the metals here real quick. There's one particular metal. If things get really, really bad, and it's like the world is coming to an end, I have my eye on SBSW. This stock right here. If this thing starts breaking down below $3.62 a share, I will be buying hand over fist. I will be making major purchases of SBSW down there. All right, that's the strategy for the day. I'm gonna be bearish after the first 20 minutes or so. I'll let the market kind of calm down after about the first 20 or 30 minutes of shorts covering or shorts being put on and so forth. A market like this will choose its direction. Let's see what's going on here. Yeah, so it looks like it might close. It might fill that gap. If it pops up above that gap right there, I'm going to start selling like crazy. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's pre-market strategy session. I am out.